Welcome to this episode of the Forex Podcast. Thank you so much for being with me, for listening to the Forex Podcast. I really do appreciate it. I hope you are all doing fantastically well. It's been an interesting month or so in the FX markets. Some big moves against the yen, Swiss franc, Japanese yen, Singapore dollar, Japanese yen really climbing higher. At the moment, in front of me, I'm looking at US dollar yen, keeping an eye on that 150 to 155 price handle, hoping for some sort of intervention trade for the Bank of Japan to intervene and bring US dollar yen down. There's also been some big moves on Swiss franc pairs, US dollar pairs, all to do with the risk sentiment caused by this war that's erupting in Israel. There's lots going on. I'm super excited for this episode because I'm going to teach you how to overcome your trading emotions. I'm going to teach you how to beat the challenges of trading psychology. I'm here to help you. We all struggle with this, even me. After 12 years of trading, I still face those challenges, those trading emotions that make trading so much harder. I'm going to teach you what I do to overcome those emotions in this episode of the Forex Podcast. Trading emotion, the killer of dreams. Many of you listening today have a dream. You have an ambition, a goal. You have a dream to become a successful Forex trader. Unfortunately for you, and for me, and everybody else, the road to becoming successful in trading is not easy. But nothing worth achieving in life is it? It's all hard. Anything worth achieving is difficult. Trading is no exception. On your Forex trading journey, there are several obstacles in your way. Some are quite small, some are much larger. They block the way to your journey's end, which is the land of profitable trading. But with time and effort, many of these obstacles are easy to remove. However, one block proves extremely difficult, almost impossible to move. This is the obstacle of trading emotion and trading psychology. All traders feel the emotional and psychological challenges of trading. I do. I know I do, and I'm sure you do as well. Most of you listening today are not yet profitable because of your lack of emotional discipline, your lack of control over your thoughts and feelings. Whenever I meet with a new student, one of the first questions I ask is, why are you currently not profitable as a Forex trader? The answer is usually related to some sort of trading emotion. Don't get discouraged though. I'm here to help you. I'm going to teach you what you need to do in order to overcome your trading emotions. The first thing you need to know in order to overcome your trading emotions is what trading emotions are. And included in that is why you have them, why there are these psychological challenges with trading. It might be that you're thinking, well, I know what they are because I feel them. Sometimes I feel them on a daily basis. I know what they are. But I don't think you do. I don't think you know why you are having them and what the cause the root, the foundation of these emotions is. The psychology involved in trading Forex or any financial market is fascinating. I love it. I love learning about trading psychology and trading emotion, because the more you learn about something, the more easily you can beat it. Many of the trading emotions you feel and your psychological challenges are founded on one thing, just one thing, and that is expectation, or more specifically, wrong expectation. Whenever our expectations are not met, it is natural for us to feel disappointed. That's life, isn't it? When similar or the same expectations are not met continually, when you're continually let down, it is natural for that disappointment to grow and to develop into frustration, resentment, sometimes even discouragement. The root of all your blows, discouragements and frustrations is expectation. Having the wrong expectations about trading can lead to emotional trading, and emotional trading will always lead to losses. You might experience some short-term gains from trading emotionally, but long-term you will always lose out. Blown trading accounts are usually down to trading emotions. And these emotions are fear, greed, boredom, and impatience. Fear. You expect to lose your profits or make a bad trade. This fear freezes your ability to act and follow your trading plan. Greed. You expect to make more from the market or a particular trade. You risk too much or let positions run for too long. Boredom. You expect more activity and excitement from trading. Perhaps you want some sort of adrenaline rush on a daily basis. You don't get it, so you take irrational trades based on boredom and other emotions. Impatience. You expect trading to be more profitable. You have yet to achieve a double-digit return this month or double your account, so you become impatient and ignore logical risk management. Can you relate to any of these things? Do you feel these emotions? Fear, greed, boredom, impatience? I know I do, and I have for the last 12 years. It is natural. Don't be too hard on yourself. It's natural to have these emotions. But it's vital that you understand the root of the problem, why you're being emotional. The heart of the emotional pain that you're feeling is your expectations. Your expectations are wrong. They are the root of all negative trading emotions. One of the most significant ways to reduce your trading emotions is to change your expectations. Let me say that again, because this is very important. One of the most significant ways to reduce your trading emotions is to change your expectations. Expectation is the root of your trading psychological challenges. Take some time to think about it. You will realize that all your trading emotions are based on having false or unrealistic expectations. What do you expect from trading? Pause the podcast. What are your expectations? Write them down. If your expectations are too high, you will always be emotional in your trading, trying to reach impossible goals and aspirations. If you're expecting too much, you will become emotional, or at least magnify your emotions beyond your ability to control them. Let's look at some examples. This may help you to see the link between expectation and emotion. A trader, could be you, could be me, expects to double their account each month. That's a wrong expectation. Because of this, the trader risks too much. High risk always means high emotion. High risk always means high emotion, based on an unrealistic expectation that they're going to double their account this month. How about another one? A trader expects to have a 90% win rate. Because of this, when the trader doesn't achieve that 90% win rate, they become emotional. A trader doesn't expect to have consecutive losing trades. Guess what? They have consecutive losing trades and become emotional. A trader expects this month to be profitable. The month is nearly over. They are showing a loss. They need to show a profit. They become emotional. Can you relate to these things? It's all based on expectations. The trader expects to double his account, expects to have a 90% win rate, expects not to have consecutive losing trades, expects to make a profit this month. The expectations are wrong. They're not achievable. The trader becomes emotional. So what should you expect from Forex trading? Well, let's bring you home. Let's bring you down to ground. I need to get you out of the clouds on some solid ground. Your win rate will be around 50%. 40 to 60%, 50% average is your win rate. That should be your expectation, that half of your trades will be profitable, half won't. Making a double-digit return in a month is as good as it gets. Most profitable months will be single-digit. Don't expect to make 10% plus every month. You're going to get single-digit returns most of the time if you have a profitable month. You will have consecutive losing trades, sometimes loads of them. A string of 10 losing trades is normal. If you have a 50% win rate, expect a string of 10 losing trades, consecutively losing 10 times in a row. Expect that to happen. You will have lots of losing days and weeks. You will even have losing months. You've had a good trading year if you gain 20% plus in the year. They are the real expectations that you need to have from trading. If they are your expectations, I can assure you that the emotions will be much less of a problem. Lower your expectations, lower your emotions. So let's have a look at trading emotions and trading psychology in more detail. Trading emotions can reveal themselves in many ways. Some Forex traders become fearful, others become stressed or anxious. Let's go through these emotions in much more detail though. Fear. Let's start off with fear because I think this is the most common trading emotion. You can have fear of losing trades. Many traders fear losing trades. They don't want them. They hate it when a stop loss is triggered and their account balance shrinks slightly, especially if they are on a losing streak and have had consecutive losing trades already. This fear can lead traders to stop trading and miss profitable trading opportunities. Having losing trades is part of trading, however. It is inevitable. It should be expected. It needs to be embraced and wholly expected as part and parcel of the trading experience. A common sign of having a fear of losing trades is not taking trades when opportunities present themselves and letting losing positions run into a significant loss. If you don't want to close a losing trade down, your expectations were wrong and you fear taking that loss. If you don't want to take a trading opportunity because you fear having another loss, you are basing that decision on your fear, on your emotions, not on logic and your trading plan. Fear of giving back profits is another one. After having a decent winning trade and showing a healthy profit, some Forex traders are then struck with fear, as they don't want to risk their profits and potentially lose their gain. Some traders think they are being sensible by ring-fencing their earnings. but they have become emotionally attached to their profits and fear losing them. If you don't want to lose your profits, that's probably emotional. You've become emotionally attached to those profits. Any trading decision based on emotion, no matter how sensible it may seem, qualifies as emotional trading. Another example of this fear is not letting positions run long enough. The trader fears losing their current floating P&L, so the current profit showing on the trade, so they close their position early instead of allowing it to run and accumulate greater profits. Not letting winning positions run is a common emotional trait of unsuccessful traders and is all based on fear. Another fear of missing out, FOMO. Some traders don't want to miss out on any lucrative trading opportunity, so they take trades based on this fear. They might think to themselves something like this: I don't want to miss out on the next Bitcoin rally. Or, I don't want to miss the next potential US dollar move. Or, surely this pair is about to reverse and I'm going to make some big money. They take trades based on these thoughts and trade their emotions. Does any of this sound familiar? Most traders, including myself, struggle with fear. Out of all the emotions, fear is the most common psychological challenge. And it's something that I have struggled with over and over again throughout the years. But I have things in place that help me not to fall not to fall into the pitfalls of fear. And I'll go through those things with you shortly. Greed. Let's look at greed in a bit more detail. Being greedy when trading is not as common as being fearful. Most traders who suffer from trading greed usually let their positions run too long, hoping to make even bigger returns. This eventually backfires, just like all emotional trading does. It always backfires. It always comes back to bite you. Traders driven by greed also tend to push strategies and time in the market to the max. Instead of being happy with today's returns, they continue to trade to the point that they are overtrading. This often leads to unnecessary losses and trading burnout. Boredom. Too many traders enter the industry with expectations of adrenaline rushes, making large sums of money hourly, always having profitable trades open, always being active in the market, and always having high market volatility. Guess what? Sometimes things are dead boring when you're a trader. Sometimes there is no volatility whatsoever. Nothing is happening. It's all part and parcel and should be expected. These sort of people want excitement, quick returns, and a Lamborghini. These false expectations are unsurprising when considering how trading educators and companies market themselves. So you might have seen videos or YouTube channels where people promote trading as something really quite fantastic and exciting all the time. It's not like that. If that's your expectation, that needs to change. If it doesn't change, you're going to become emotional in your trading. Perhaps you're going to suffer with boredom in your trading. Traders struggling with boredom must accept that the most successful traders and reliable trading strategies wait for the right trading opportunities. They have to be patient. They have to wait for these opportunities to present themselves. Many traders, though, get bored of waiting for these opportunities, so they decide to make their own opportunities. Guess what? It fails because they became emotional. Their trade was based on trading emotion. Impatience, which is very much linked to greed and boredom. Impatience can be directly linked to boredom, like all other negative emotions. Impatience is based on wrong expectations. Impatience, especially when dealing with monetary gain, is a crucial component of the psychological and emotional structure of trading. The inability to wait for a decent return is a common characteristic that leads to blown trading accounts and significant losses. I once watched this documentary, and you might be able to find it on YouTube. Perhaps if I can find the name of the documentary, I'll share it with you. But I once watched this clip from this documentary where the man leading the documentary, the guy doing the interviews, was offering the public money. And the clip went something like this. Okay, so this TV documentary host stood in a busy city centre with a handful of cash. And he stopped people randomly and asked them this question. He said, "Would you rather I give you $100 or $105? Okay, so imagine yourself being stopped. Someone's offering you $100 or £100, euros, depending where you are based in the world. Would you rather have 100 or 105? Of course, everyone who was asked said 105. Why wouldn't you? The documentary host then asked a second question. He said, "Would you rather have $1 right now?" and showing them the $100 in his hand, or $105 in 30 days? So would you rather have the $100 now, or wait 30 days and have the $105? Almost everyone said the $100 now. Why? Impatience and other trading emotions. What a thought-provoking experience. Think about that. How would you answer that question? Would you have taken the $100 or the $105? If you give it some thought, you'll realize that those being asked were making decisions based on emotion rather than logic. It makes total sense to accept the more extensive offer of $105 or pounds or euros. However, the lack of patience in waiting 30 days, or maybe the fear of not believing that the money would come in 30 days, led these individuals to choose the more irrational answer, the more irrational choice. They wanted instant gratification. Unfortunately, this is why most people fail in trading. They let their emotions dictate their decisions rather than logic and rationale. There's something called the trading emotions cycle. I like to call it the loser's cycle. Because of trading emotions, becoming a market wizard and beating the market is not easy. I think everyone who has some sort of trading experience will agree with that. Whether you plan on trading stocks, Forex, commodities, you will face emotional and psychological demons. Watching traders overcome these trading challenges can be very inspiring and exciting though. There is light at the end of the tunnel. Unfortunately though, even with the best trading strategies, many traders are not able to overcome their emotions and beat the market. What's worse is that they enter this trading emotion cycle, this loser cycle that I just mentioned. What can happen is they find, create, or learn a trading strategy. They trade the strategy, become emotional, lose, and give up. They'll leave it a day, maybe a week, maybe a year. Guess what? They find, create, or learn a new trading strategy. They trade the strategy, they become emotional, they lose, they give up. They find a new trading strategy, they learn a new trading strategy, they trade the strategy, they become emotional, they lose, they give up. So many people are stuck in this loser's cycle. And it's not really a cycle, it's a spiral. Because each time they go round, they seem to get themselves more and more into a emotional or financial mess. Almost all losing traders are in this cycle. They are the strategy hoppers. They hop from one strategy to another. They are the ones who blame the strategy or the broker for their constant losses and blown trading accounts. They are the traders who fail repeatedly because they constantly become victims of their emotions. They are ruining it for themselves. If you are stuck in this cycle, let me help you by giving you my top tips to overcoming your trading emotions and mastering the challenges of trading psychology. The first thing to mention is it's not possible to eliminate trading emotions. You're always going to be faced with trading emotions. As mentioned already, I've been trading for over 12 years. I still face trading emotions. The key is not to eliminate trading emotions, because that's not possible. The key is to reduce the intensity of these emotions and try and avoid these emotions, these psychological challenges, where possible. Let me give you my top tips. Tip 1 will be no surprise to you. It is change your expectations. Change them. Have more realistic expectations. I want you to be ambitious. I want you to be excited about trading, but be realistic and expect hard times. Lower your win rate. Lower your expected performance. Changing your expectations are the best way to reduce the challenges caused by trading emotions. Number 2, reduce your trading capital. There is undeniably emotional attachment to money, especially money you're using to trade Forex. This emotional attachment intensifies if you're trading with more money than you are comfortable losing, or dealing with money you cannot afford to lose. Why put yourself in that position? Why cause yourself so much pain? Reduce your trading capital to feel more comfortable and to make the trading experience more enjoyable. You will enjoy trading more if you have a smaller account size. If you are not enjoying trading because it's an emotional drain, then why do it? Ask yourself this question. How would I feel if I lost my trading account today? If that's too hard to answer, if the pain is too much, you are trading with an account size that's too big for you. Reduce your trading capital. 3, reduce your position sizing. High risk means high emotion. Low risk means low emotion. Reduce your position size. Risking anywhere between 0.1% and 1% per trade is a good place to be. Don't be risking more than 1% per trade. And for most people, 1% is too much as it is. 0.1% to 0.5%, that's what you want to be aiming for. 4, focus on percentage returns rather than monetary gain. As already mentioned, there is an undeniable emotional attachment to money. Because of this, it's much better to focus on percentage return or loss than monetary return or loss. Looking at performance by percentage is much more professional and will help you gauge how much you need to make a decent income through trading. Being able to state that I make 40% per year or I can double my account each year is much more meaningful and precise than I made 10 grand last year. Focus on percentages. It's a percentage game. It's not a pip game. It's not a monetary game. It's all to do with percentages. Focus on percentages. Another one. Think longer term. How often do you check your account balance? How frequently do you review your performance? Most unsuccessful traders check these things daily. How much money have I made today? Is something they might ask themselves. This mindset is totally wrong and highly unprofessional. It also creates high emotions. Do yourself a big favor. Ease the pressure on yourself by trying to be profitable this year, not this week or today. Focus on longer term. Initially, Focus on making money from Forex as like a money-making hobby or a second income. Don't put the pressure on yourself to make it a full-time rewarding career. Start simple, think longer term. Try to become successful in the next 2 years, not this month. Think longer term. Another, keep busy. Staring at price charts, looking at the performance of your current positions is a great way to become emotional. Enter your trades, set and forget. Enter your trades, perhaps check them once or twice daily. Don't look at them continually. That will intensify those trading emotions. So keep busy. Trade while you work. Play video games, read books, go out, go to the gym, whatever. You need to keep focused and make logical trading decisions. But at the same time, once a trade is open, you don't need to be checking it and growing an emotional attachment to it. Give it its own space. Live your own life. Keep busy. Another tip. Consider longer term trading. Day trading is far more emotional than swing trading. This doesn't mean you shouldn't day trade. It means you are making trading much harder for yourself. I think that all new traders should become profitable swing traders before moving into day trading. So thank you so much for being with me today. Thank you so much for listening to this episode. You can do this. You can overcome your trading emotions. Apply the things that I have taught you. Lower your expectations. Reduce your trading capital. Reduce your position sizing. Focus on percentages rather than monetary gain. Think longer term. Keep busy. Consider longer term trading. I truly wish you all the best in your Forex trading.